Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about economic data, how that impacts the markets with a little market analysis, maybe sprinkle in a little geopolitical fodder to round that all off, and then talk about option strategies we could implement into a portfolio based on these assumptions we come up with in our market analysis. All right, so without further ado, let's get on with what's going on in the markets right now. Not a whole lot of economic data. We didn't get anything really yesterday. Later on this afternoon, though, here in the United States, we get our CB consumer confidence. Keep in mind that was around 97. I expect that to come off a little bit. We'll talk about why here in just a moment. Richmond manufacturing index coming in, expected to be coming in at negative 13. Last month it was negative 11, so keep your eyes out for that. I would expect that to come in a little bit lower than expected. New home sales, 663,000. This one's a bit of a flyer here. Yeah, I have a lot of folks that I'm friends with that are mortgage companies and stuff like that. They're actually been laying off people because of this slowdown, increasing interest rates. Very difficult to try and sell a mortgage or get folks to refinance. So that business is sliding. So I would expect new home sales maybe coming in a little bit lower, but it could be a flyer on this one to the upside because of higher interest rates and that fear getting folks off the porch, if you will, and getting out there buying those homes before they get too high on the interest rates. All right. Because remember, we talked about this. If I'm looking to buy a house and I know interest rates are going to go higher, it means that I can afford less of a house due to paying more to the interest rate there. Now, why was I saying that consumer confidence might be waning a little bit? Well, guess what? Walmart, let's just get to Walmart here. I've got crude oil up right now, but let me try and find a Walmart quote. Or Walmart right now, you can see this here off almost 10% right now. Actually, that probably is 10%, pretty close to that anyway. Off 10%. Why? Because they guided downward outside of their earnings. I guess they're trying to get folks flushed out before the earnings there. 10% lower here on EPS year over year. That's giving them a correction of about 10% as of right now. So is Walmart going to bring down the entire retail sector? The reason why this is the first shot across the bow, if you will, it's the first time we've heard a retailer come out and say, hey, we're going to miss on earnings. And this could be a slowdown in the economy. Why? Because so many people, I told you this a long time ago, people are buying gas and not able to afford the other little things. They can't afford an impulse buy at Walmart when they're walking by the end caps. And, you know, those are places where we usually, hey, we got an extra couple of dollars. Yeah, sure. Let's pick that up too. That's not happening. When people go to Starbucks, they're not buying maybe the sandwich. When people are going to dinner, they're not getting a dessert or maybe an extra drink. So those things are going to slow the economy there. And we're already seeing the shot across the bow from Walmart, as you can tell, down 10% on the day. Now, that's not really driving the rest of the markets down. We can see crude oil still trying to test that $100 a barrel mark. Everybody and their brother wants to see this fall down into the 70s at least, I'm sure. But that's not going to happen, folks, until we get something coming out of the administration saying that they are going to open up some permits. They're going to allow more oil to be pumped, and does not seem like that's the direction they're going to go to. So this seems like it could be a bottoming here, and crude oil looking to retest that $100 a barrel mark. Bonds continue to bunk the Fed. Remember, tomorrow we got the FOMC. That's going to be the rate announcement. It basically somewhere a toss up between 75 basis points and 100 basis points. 100 basis points, folks. That is a massive move. If you think about Fed fund futures real quick and how big of a move this is in regards to what's happening here price wise, if you're a trader, let's say where did my thing go? If you're a trader with Fed funds, I was hoping I'd be able to get my pin up here, but for some reason it doesn't want to be playing around with me. It seems like it's popping up somewhere. I guess I'm not going to be able to draw. Anyway, so if we're thinking about Fed funds and this type of move, in Fed fund futures, one full tick is 41.67. That's one lot. So if the market were to adjust by 1 percentage point or 1 point in Fed fund futures, that's essentially saying a $41 move, but that's only basically 1/100th of a 25 basis point move. If it were to move 25 basis points, okay, and remember the Fed moving at 75 basis point moves. If Fed fund futures move by 1% or 125 point increment, moves 25 points to match that, that is $1,000 on a one lot, folks. So when we're talking 3 basis point or 325 basis point moves, that is 3,000 for every one lot that you have on. All right. So when we're thinking hundreds and thousands of contracts for these banks, this is moving money, folks. So Fed fund futures are one of the biggest tick values out there. What's that saying, though, is that the Fed is rising interest rates way too fast. The bonds are telling us that they are going to go too far, too fast. So we might very well see a 100 basis point move out of the Fed tomorrow, because it's kind of getting baked into the cake in the bonds on the back end. The long end of the curve are saying, yeah, that's baked into the cake and you guys are way overdoing this. With that said, gold futures and Bitcoin just not reacting the same way with this type of inflationary pressures. With crude oil moving higher, we would expect these two, Bitcoin and gold, to be moving lockstep with that type of move, because it should be considered a store of value. I thought we were getting a little bit of a blip here, and Bitcoin, thinking maybe the paradigm has shifted to the younger investor, is more likely to go to the Bitcoin rather than to go to the gold futures to hedge some of these moves that are happening in equities. Usually folks will pull money out of equities and will put those into stores of value like bonds, which is part of the reason why bonds are moving a little bit higher. The other is the fact that speculation is they're going to overdo it. But storing cash is not normally what we see from these investment professionals. That's led me to believe that they want to reallocate money quickly because of a V-shaped type recovery. I don't know that we're out of the woods here, folks. Walmart's the first shoe to drop to say that, hey, things aren't looking so great. And we could definitely see that next leg down that I just mentioned about yesterday. We're building a little bit of a bottom here, but I don't feel like we've really felt the pain necessarily, and there could be another leg down to the downside here. VIX, while it looks like it could be building a bottom there, it's probably maybe going to stay right here for right now unless we go below this 50-day simple moving average. I think VIX will hold on a little bit. It could be just some little short coverings here. Walmart's going to be the real wild card. Is anybody else going to come out and start announcing, hey, ahead of their earnings, things aren't looking so great? Like I said, market's not necessarily reacting to that. Dow Jones is off by about 120 points here on the day, but not a 10% correction, getting the rest of the retailers to follow suit here. Now, building that top, though, finding support around that 50-day simple moving average is how I would be trading this one here. As you can see, overnight inventory not really reacting off of Walmart's news. Mostly it's talk about chip makers here in the United States right now, but I think that that's because when we're watching headline news or we're watching financial news, listen, folks, when markets are bullish, those guys get better ratings than when markets are bearish. That's why these guys always are talking to the upside, aside from the fact that they like licking your ear, if you will, for lack of a better phrase. They like to do that. Why? Because then you will pay attention a little bit more if they talk your position, if you will, which is generally from the retail investor, a bullish market move expected. So with that said, I'm not always going to tell you exactly what you want to hear. And I believe that the downside is not necessarily in. We could retest this relatively quickly here as retailers start coming out signaling, hey, there's some issues and, that need to be addressed here. Now, with that said, during this whole sell-off, I have done quite a bit of work and added some markets to my portfolio here. With that said, IBM is something that you guys know that I've sold some puts in, and I'm long IBM right around. IBM. Let's just go to these. Excuse me. Let's go to IBM. IBM, I sold some puts here at the 120 level, if you guys remember, in the August, just recently for $1.20. It's trading right around 90, so about a third reduction in my premium. I'm going to go for about 50% on this one because it's actually great strike locations down here at the 120 area. I'd be happy to get long IBM around that area. You guys you heard me talking. Listen, folks, this is one of the best strategy or best underlines to trade because it's a sideways trending market. We can pretty easily tell what our price level is that we would want to get involved. And with that said, IBM 120 is a pretty good location there. Also, I am still long Walmart right around 125. It's trading 120. And the other one that I have is Yum Brands. All three of those of which, and Walmart, of course, Walmart, I am long also at 125. So Walmart not looking so good. Long at 125, it looked good for about a day, but today down here at around 120-ish, I'm below water now. So I have been layering in. I am going to keep an eye on this. Volatility is still relatively high, but we're heading into an earnings. It might just be enough to pull the ripcord on this one for right now and then try and reallocate here going forward. But IBM, Walmart, Yum Brands, Las Vegas Sands are some stocks that I own. We've been doing some covered calls in here. Anytime I get these pops, I'm looking to cover those calls on these types of things with high volatility. And I do need to make sure that they don't have that earnings. So something like with Walmart, a little late to the game to be doing covered calls in this strategy for that earnings, just a lower basis point. One last time, not going to happen. So I'm going to ride that one out, at least for right now, but much more of a correction here. We don't get some bottoming, I'll probably pull the ripcord on this one. All right, that's all I got for you guys. Hope you have a great day. And if you can't take that, take it easy.